Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Apple, Spotify, or Google, please leave a 5-star rating. Happy New Year, my friends. I'm wishing you all a healthy and prosperous 2023. 2022 is behind us. Let's move forward. Let's do great things this year. And I'm looking forward to higher prices, of course, because I'm here to make money. And I want to talk a bit about the Bitcoin yearly candle chart, because this is a very insightful chart. It tells a really great story. And if you look back at the history, we've seen 3 green candles from a yearly standpoint now, and then 1 red candle. And that's usually the bear market. That's the correction. So we saw 2011 to 2012 to 2013 were green candles. 2014, we had a red candle. 2015, 2016, and 2017 were green candles. And 2018 was a red candle. That was the bear market. Then 2019, 2020, and 2021 were green candles. And 2022, as we all know, was a red candle. So the perspective here is that you have the Bitcoin halving taking place every 4 years. And after that red candle year, that bear market, the halving usually takes place. And then the prices start moving up. So what can we anticipate or expect for 2023? A green candle year. Now, when I say that, I don't want you to misinterpret it. I'm not talking about new all-time highs. I'm talking about price movements off the low. So we start moving upwards, and it's not probably going to hit the new all-time or the old all-time highs that we saw in the previous bear market. But the year of the halving into the following year of the halving, we could see new all-time highs where we break the old all-time high prices. So you have to keep these things into perspective. And these are charts that I've been studying for years and have helped me to make money in this market. I'm trying to share that knowledge, share that education with you guys, because it is an opportunity. There's people I know who have listened to me. They've made money. I'm not a financial advisor, of course, but rather I'm just trying to share the knowledge of how market cycles work, laying aside your emotions and looking at the data, looking at the charts, right? Let that be your source of truth, not your emotions, not the sensationalism from headlines or what they say on CNBC Finance or even what you see on Twitter. Just, hey, there's some data in front of me. All emotions aside, bearish, bullish, negative, positive, whatever. What does this data tell me? What story is it telling me? And we're seeing here, once again, the Bitcoin halving is the main driver of these bull markets. And yes, there's macroeconomic factors happening right now, but it aligns with what the Fed is doing for the most part. So, they're running parallel side by side. So, I'm anticipating a green year for 2023. As I said in my prediction podcast, I believe Bitcoin's going to have a rally, probably up to $30,000, $40,000 in that range, then have a correction, then slowly start moving up as we head into 2024 into the halving. And then I think by 2025, we start to see a new all-time highs. My plan for 2023 is to accumulate dollar cost average in, buy the dip. Yes, we could go lower. I'm not saying we have officially hit the bottom. I don't know that. And if anyone tells you that, like I've always said, please ask them for next week's winning lottery numbers so we can, go play it and win some money, because I don't have a crystal ball. No one has a crystal ball. I don't have a time machine. This is not Back to the Future, but we at least use the data we have as of today to make an educated guess, right? That is how you have to approach it. There are no guarantees here. But you want to get as close to an approximation of accuracy as possible by using data, not our feelings, our emotions, and what we feel, how we woke up this morning, but rather what do the charts tell us, and how has the market performed historically? So I'm expecting a green year. Once again, nothing to write home about, but definitely a bounce off the lows that we're seeing now. Here's another data set, which, it's pretty much the same. It conveys the same thing as the previous chart, and it shows the yearly candles by H1 and H2. So H1 being the half of the first part of the year, H2 being the second half of the year. So similarly, in 2017, we had a massive green candle in H2 or H1 and H2. In 2018, H1 and H2 were both red, right? H1 2018, H2 2018, both red. H1 2019 was green. H2 2019 was red, but then we saw a bounce right in the H1 of 2020, and of course higher highs into H2 of 2020. And then that continued, and here you can see in the chart, H1 of 2022 down, H2 of 2022 down, red candles. So when you look at it, in a simplified manner like this with yearly candles, it just tells a really great, story of how you can, plan and strategize in this market. And I hope that's resonating. These are, once again, the data points that I've been looking at. This is not the only thing, but, this is part of it. So yeah, 2022 was a down year. It's a bear market. Yes, it's a wash. That's okay. Nothing goes up in a straight line. No market goes up forever, right? There has to be corrections, and the cycles are playing out once again. So I hope, this makes sense to you guys. It's in my opinion, super helpful. And I'm certainly, going to keep an eye on this. If anything deviates, obviously we'll have to update our thesis based on the facts changing. But as of right now, these are the facts, and we're going to form our thesis around it. Now, Chris King, he is the founder of Eaglebrook, and they are an investment management company. And he tweeted some sentiments, which I agree with. He said, "My only prediction for 2023, inflation is lower than expected for H1 2023. Fed stops hiking by June. Bitcoin summer to 30K, then back to the 20-25K range until the halving in March 2024. New all-time highs 8 to 12 months after the March 2024 halving." So that's a pretty great summary, right? Not what a lot of people would like to hear, but that's why investing, you have to exercise patience. Patience is the key, guys. I didn't make money in this market by thinking Bitcoin was going to go to 100K in overnight or go to new all-time highs overnight, right? I had to be patient. I bought the dip in 2018, bought the dip in 2019. I even bought the dip in the 2020 pandemic crash. And then I was patient, and you have to, really put aside your feelings and emotions, because you're going to see headlines. You're going to have family members and people who are not financially educated tell you, "Oh, you see, this is dead. I don't know why you're investing. I don't know why you're investing in this." And then usually those people end up coming in and buying the top, right? Those who are not financially educated. Understanding the charts, understanding the market cycles, dollar cost averaging, when to buy, when to sell. That is a big part of financial education. And a lot of people, unfortunately, don't take the time to do that. They listen to Jim Cramer on TV, right? They follow the headlines. "Oh, Bitcoin's pumping to new all-time high. This coin is up. That coin is up." And that's usually the time when you want to be selling. But that's the dumb money crowd. They come in and they buy the hype. They don't have that financial education. And that's what I'm trying to share on this podcast, the financial education, and to really go against the herd, go against the mainstream. Because if you're following mainstream, you're going to get wrecked most often than not, right? So these things, you have to really hold on to these principles and plan out and strategize accordingly. Now, even the stock market is down. I invest in stocks as well as crypto, but it just further enforces that, we are in a macro bear market. Let this thing bottom out. Let the bears have their day, but then the bulls will come back and have their day as well. So the NASDAQ yearly chart, very few understand this, but 2022 is the worst year since 2008, the great financial crisis. Many will take the 2022 pullback lightly, thinking it's just the beginning. NASDAQ is down 33% in 2022. In 2008, it was down 41%. Bitcoin, of course, down 78% from the 69K top. Statistically, 2023 should be better. So you look at the NASDAQ chart here, down as well, right? It just market cycles playing out, my friends. And once you understand, you just lay aside your emotions, your biases, and you just say, okay, markets go up, they pump, and then they correct. It's not the end of the world. The world is not ending. The markets are not done. It's not that, every single time we have a correction, especially when it's something that's significant, like 2000 dot-com bubble, 2008 housing crash and economic crash, excuse me, it was like, oh no, it's Armageddon, it's the end of the world. And people get caught into that fear cycle and the media plays to that. But smart money, people who look at charts, who understand investing principles, they continue to invest. They dollar cost average, they buy the lows, and then they wait. They don't listen to the noise. And this applies for stocks as well, right? Stocks, crypto, and so forth. Even real estate. Real estate is taking a hit right now. I don't invest, really in real estate. I have an investment property, but my investments are primarily in stocks and crypto, heavily on crypto, of course, because I believe there's more upside there. But I'm just being transparent with you guys. I'm diversified in that way, and I look at the market cycles for both, right? How are things playing out? Where are we? Are we near the top? Are we near the bottom? When should I be buying? Of course, I want to buy the bottom. And then I have to be patient because it's not going to go up in a straight line. Yes, we sometimes hit that bullish momentum where things can go crazy, especially in crypto, right? You see some massive green candles from a daily or even weekly perspective, but you got to be patient and go through a lot of ups and downs till you hit that period where it's euphoria again. So, once again, stock market, everything is down, but a great buying opportunity for sure. Now let's move ahead, guys. Crypto exchanges finished 2022 with the lowest volumes in 2 years. So everybody's feeling the pinch here, and not much is happening. And there are people who are not trading anymore, who have left the market. But those of us who are still here, we once again are sticking to our fundamentals and not our emotions, and we're looking at the charts and looking for buying opportunities. So it's a painful time. I'm not saying it's easy, and there's more pain ahead, and the exchanges and so forth are feeling it. And hopefully many of them are in a good financial position where they can go through these situations. But we'll have to wait and see how things pan out. Now, U.S. lawmakers under pressure following FTX collapse. In response to FTX's fall, U.S. lawmakers are re-evaluating the crypto industry's regulatory needs for 2023. Now, those of you who saw my or listened to my 2023 predictions podcast, I talked about this is the year that we are going to see comprehensive regulations. Now, it may not be the perfect set of rules and laws, as far as what the SEC is doing, what's a security, what's not a security. But I did say I believe stablecoin regulations are going to come in hot and heavy. That's going to be the first item. And hopefully we get the comprehensive regulations about what's a security and what's not. And I think this is going to be a big thing this year, guys, especially after this whole FTX collapse. And I think once members of government and everybody's back to working full time, expect to see a lot of news around this, guys. And this hopefully they get it right, and there's no heavy-handed regulations. There's no knee-jerk reactions as a result of the idiocy of Sam Bankman-Fried and these folks at FTX and Alameda. Now, Grayscale, as you all know, has been in a little bit of a tight position, right? Their back's against the wall a little bit because they're owned by Digital Currency Group, and that also owns Genesis Trading, which is not in a good spot right now. So we got news that crypto asset manager Valkyrie Investments wants to sponsor manage Grayscale Bitcoin Trust. GBTC, the world's largest Bitcoin fund, has been trading at near a record discount relative to the price of Bitcoin. So it looks like some folks are trying to come in, maybe buy them out, take over. We'll see. So Valkyrie was one of Grayscale's rivals, previously launched a Bitcoin trust and a Bitcoin-related exchange-traded fund, also known as an ETF, in 2021. As part of their plan to sponsor GBTC, the world's largest Bitcoin fund, the Tennessee-based company also announced the launch of a new fund, the Valkyrie Opportunistic Fund LP, that seeks to take advantage of GBTC's discount to the value of its underlying Bitcoin. The company said Valkyrie's plan would be a tall order considering the GBTC alone has over $10 billion in assets and Valkyrie only handles roughly $180 million in total assets. Here's a quote. We understand that Grayscale has played an important role in the development and growth of the Bitcoin ecosystem with the launch of GBTC. And we respect the team and the work they have done, Valkyrie said. However, in light of recent events involving Grayscale and its family of affiliate companies, it's time for a change. So you know what this is, right, my friends? What's the quote? The victory goes to the victors goes the spoils. Wow, couldn't get that right. But essentially, Valkyrie is in a obviously a good spot. They're not hurting. They see Grayscale is hurting, so they're trying to swoop in and say, "Hey guys, let's do this. We'll acquire you. We'll manage you. Whatever." Right? And look, that's what happens in bear markets, right? Weaker companies get acquired, or they're usually some sort of merger or something, and they lose their market share. But I don't want to see Grayscale fail. That would be really detrimental to the market, given the amount of Bitcoin and also altcoins that they hold. So I'm hoping that something can work out here if it makes sense. Grayscale and DCG are in a good spot and they're not going to go under, then continue business. Just make sure your books are in order. But if not, they should probably take Valkyrie's offer here, right? Let Valkyrie take over. And look, Valkyrie is a pretty trusted name, so I think it would be good if this happened. Either way, if it were to happen this way, I think it will be good for the market. So let's see what happens, guys. This bear market's not over yet. The Fed, as I said in my prediction video, will continue to raise rates. It will be at smaller increments, 25 basis points versus 50 or 75. And maybe we'll see two of those going into this year. And by the half of this year, they stop and the markets turn bullish. Bitcoin and the crypto markets start working their way up, and these companies can, hopefully do better, and hopefully they can last over the first or H1 of 2023. Hopefully everything will be okay. Now, here's some interesting news. Australia overtakes El Salvador to become the fourth largest crypto ATM hub. El Salvador's position as the fourth largest crypto ATM hub was short-lived as Australia stepped up its game over the following months. Guys, despite all the issues that we've been seeing in the market, prices down and so forth, there's still building happening. And it's specifically around the infrastructure. On and off ramps being built in different countries, different parts of the world. I think we had seen, I think it was like 2 months ago, Brazil, they said crypto could be used for payments and so forth. So things are moving in the right direction, guys. I know it's not as fast as we would like, but we're just seeing big moves. And the fact that Australia, which, there's a whole lot of things we've seen during like the pandemic and so forth, but Australia is just so heavy-handed with their kind of draconian rules and regulation, right? But that's not what this podcast is about. But the fact that crypto ATMs and crypto adoption is happening there, it just shows this thing is here to stay, my friends. The building is happening, and sometimes because we're caught up in the hours and the days and the weeks and the months of crypto and the price movements, we miss all the building that's happening from a yearly perspective, because these things do take time. And as someone who's been here since 2016, guys, we've come so far. I've experienced bear markets. I've experienced FUD. I've experienced just not having, the type of news that we see today, like BlackRock entering the market or BNY Mellon and so forth. Those of you who came in this past bull market, you're kind of spoiled, guys. You guys got the major news. We didn't have this back in 2016, 2017. It was, you really had to have a conviction around this. But now it's like you come in, you have the validation from like PayPal adopting it, BlackRock. So I think the trend continues of the building ATMs and all types of on and off ramps, guys. I'm excited for the future of this market. And I've never been more bullish. And yes, I've never been more bullish, even at what we're at right now. The prices we're at right now, it's rough. Yes, Sam Bankman-Fried is an idiot. Yes, FTX was painful. But guys, eventually, all these things will become, and it will fade into the past, into the history, right? And people are, guess what? Once the price starts pumping, people are not going to care about Sandbag repeat at FTX. They'll come back in again. I'm telling you guys, I've seen it. I saw the ICO collapse. I saw all types of narratives. Hell, even just the COVID pandemic crash, right? That one actually scared me because that wasn't crypto specific. It wasn't a business thing. It wasn't an idiot like Sam Bankman-Fried. It was like, oh, the world is shutting down. Is this actually the Armageddon? Is this actually the end of the world? So that actually, put a little bit of fear in me because I was like, oh, wait. But then my initial reaction was that. But then I started looking at the charts and thinking through things and, listening to the news in a sense of, okay, what is this thing we're dealing with? And I'm like, wait, they had the Spanish flu back in the 1900s, right? This is not the Great Depression, like what happened in the 1920s. So I essentially was like, wait, okay, put aside my emotions, and I bought the dip. And time and time again, I've seen when I've done that, put aside my emotions and look at the charts and the data, and I've made those informed decisions based on the data, it has worked out well for me. It has allowed me to make money. And that's what I'm trying to share with you guys. I hope, some of you will take this information, and I'm not saying go and invest. I'm saying go and do your own research and validate what I'm saying to you, of course, but go and see, is this facts, right? Does this align logically for you? And I think you will find it does. And I had mentors who shared this information with me, those of you who are investors like on Wall Street and so forth. And I'm thankful for that those things opened my eyes big time. So anyway, guys, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button, and I'll talk to you all later.